This is a special podcast. We're here to bring you Kitty and Bald Man in the national anthem. Oh, say can you meow, 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 meow. Meow, 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 meow. Take it away, Kitty. Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we're gonna talk about KOSS. Now, KOSS, this is a meme stock. Now, this meme stock, it is just a normal meme stock. We're talking about it used to be a dying company, but it's been around for a while. Actually, a long while. This came out in the 1950s, and they sell headphones. Now, this company itself, it has about $40 million in market capital. But when we look at just the stock market and its free float, it has about 5 million float. And they've been doing a lot with that 5 million float. The stock itself is kind of illiquid. On the average day, it's hitting about 100 million volume, and it has a high short interest. And because of that, we've seen this stock go all the way from $4 all the way up to $18 one day before July 4th. Now, what that means is on a half day before an actual national holiday, before the stock market closes, you saw a decent amount of volume. One that just went right past all the historic volume. That is crazy because as a day trader, I like to keep consistent. I like to follow the patterns, read my scanners, and I just manage the risk. I find the volatility. Well, this one, it went past my scanners. In that first hour, I did see some trades, but I didn't see this one. And so I didn't touch it. But when we look at KOSS, if we go back to 3 years ago in 2021, GME, it had a lot of sympathy plays, and KOSS was one of those. It was sitting somewhere around $30. Well, at that point, everyone just saw this as a cheaper version of what can happen on GME. We didn't know who was gonna make the next big spike. Well, I guess people still believe that KOSS can be the next 2.0 of the MOAS. Well, not me personally, but what we will say is that there is a recipe for a short squeeze inside of KOSS, and it can happen at any point. And so we only had two tickers this week that had pretty decent volume. That was VS and CSLR. With these tickers, they're not all that high. We normally focus on tickers that are above $3 and like well above $3, so we can pretty much get some volume. And with that volume, there's usually price actions and historic resistance that we could play off of. We're mostly going for these resistance plays like bounce shorts. Well, with VS and CSLR, they were more gap up short material. So we didn't really have much to work with in the history or on the day, but they were still a part of the gap up short. We're talking about a little bit of a consistent resistance. And if you were tracking that, these are two plays that probably came up on your radar. So look at CSLR. So here's the intraday chart of CSLR. With this, if we look at the history, this one has a lot of sideways activity around $3 to $2. Now with this, it's mostly concentrated in the 250 area. That's pretty fine. Now the reason that's important is because if we go back to last month, right before this went to 20 cents, this came all the way back up in that 2-month range to $1. From that $1, it went all the way back up to $2, which is 100% away from that level, which is important because we know this stock is building from the bottom. And with that 100% extension, we understand that clear breakouts usually double. At this point, this already went to 2 and it made another bottom around the 120. Now the next double from that 120 is 240. Now that 240 just happens to align with the sideways price action that we see in the historic resistance within that first year. So you gotta pay attention here. This one gets a little complicated. You probably would have missed it if you didn't look for it. Now, when it comes to gap up shorts, we have to understand there's some type of resistance that acts as a magnet or it acts as a wall. And we usually look for like big pieces of resistance, but there's another price level that we call key levels that can also work. And that's consistent resistance. We're talking about over here, there's at least 2 months of sideways price action, followed by another at least 2 months of sideways price action. Here, you see it's around 250 and it even touches $3 at one point. We like that because we can use that as a layer of resistance. Now that layer is supported by a layer down by 180. So if we fast forward 6 months, there was a huge taper off all the way to 20 cents. At that point, we hit pretty much the bottom of the stock. We don't really understand the catalyst, but we understand that the company raised some money, promotions, retail traders, and everyone jumped into the stock. Now, they didn't do it in big waves, but they did it enough to raise the price, and the price went all the way up to $1. Now, at that point, $1 puts you above OTC market. It puts you on NASDAQ. It puts you in the real neighborhood of traders. And that's what you want. You want to go to a higher level to where you get access to different sorts of traders. And at that point, the sky's the limit.
Interested in trading like Steven Dux? It all starts with choosing the right broker. Dux Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Dux Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
This is VS. This happened today. Now, the thing with VS is it's a $2 stock. Now, we pretty much call it a $2 stock because it happened intraday. And so we're talking about the pre-market plus intraday. Where did you originally start? Where did you find the stock price at the open? Well, this was closer to $2, which is why we consider it a $2 stock. From that point, anything can happen. It can go up, it can go down. Those are pretty much the only two options. But the way we classify it, it's about what process fits the pattern. Now, in this case, we had the extension from $1 all the way up to $2.50. And if we look at the history, this one had some history around $3, but most of its sideways price action was around $2.50. Because it was around $2.50 with most of the price action, we waited for it to pull back, and then it found some bottom. Then it found a bottom around $120. Now remember, when we find this bottom, we kind of expect this to have history of volatility, mostly spikeability. As long as it has historic resistance, it's in the NASDAQ market, and it's around that $1 to $2 range, we consider it popular. People are going to go for these type of stocks. Now, the cheaper it is, the more volume is going to be in these stocks. The more people are going to just try to get quick trades because the percentages are larger when you have cheaper stocks. I usually try to stay away from them, but in this case, it's still technically tradable. It's a gap up short. Now, when it comes to this gap up short, I'd actually consider this barely qualifying, mostly because of the resistances, but there are levels that can be traded. Now, this going from $2.50 and then pulling back all the way to $180, that's just the reward. Now, in this case, we'll see that there was a pre-market high, and then that pre-market high was tested and it confirmed. After it confirmed, there was a huge pullback. We would pretty much try our risk management around that 240 and probably risk anywhere from 20 to 50 cents, depending on your strategy. But even before that point, we were just looking at the extension from the close. We were looking at the resistance. How far was it from the resistance before the open? Now, when it comes to like right before a national holiday or a 3-day weekend, a lot of people are really trying to not trade over the weekend. Well, this one caught me off guard. So normally I wouldn't trade these kind of plays, but the amount of volume that happened today, it was too obvious to ignore. This was clearly going to be a breakout. Now, whether this can continue, I don't know. I do hear that it has a lot of reasons that it could continue. There's no option chain. There's no previous reverse split or even shelving for some type of offering or dilution. This literally has the sky as its limit. If you really want to know more about it, well, there's a guy that made a theory about it on Reddit. Now, his name is Superstonk, and his article is GME KOSS connection. And then it has some stuff after that, but it's a decent article. His theory was that KOSS is going to make the next GME MOAS. Now, there are a lot of things in there that are a little harder to read or understand, especially if you don't know anything about naked short selling or the background of a business, especially large caps. But I do want to say that it's well written enough to probably make him the next roaring kitty. Now, he has fundamental analysis and he has technical analysis. He shows how there's a big correlation between all the huge volume and spikes inside of KOSS and GME. Now, they happen at the same time. But all right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.